So joining us now is Mark McCarron, Chief Investment Officer at Westcott Financial Advisory Group, to help us break down really the next phase of this AI trade. So Mark, thanks so much for being with us today. As I'm sure we both know, many skeptics want to compare this AI boom to past tech bubbles. So what really stands out to you as being fundamentally different this time around?
Yeah, it's an interesting time, and it's similar in many ways. It rhymes, but there are a few differences, I think, in that the leading companies today sort of investing in AI are very, very cash rich. There's not a lot of debt being taken on by the biggest players anyway in the space. And the winners are really in the hardware sector today. I think it's helpful to think about who today's winners are versus maybe who tomorrow's winners might be. But what's really happening today is, at least the early stages, there's a lot of cash-rich companies doing the investing and driving the market today.
And it does seem like right now the market is no longer just rewarding like the broad reach into AI. They really want to see that now this monetization push. So what do you see that real shift towards monetization actually looking like for some of these big tech players?
Well, I think we think about it sort of as an AI ecosystem. So the enablers are the technology companies that enable the growth of it in the chip makers. The monetizers are those that are going to sell the product and service to the enterprise software companies or the general public. And we're seeing Alphabet, Amazon, Meta, and some of the underlying model builders, right, Anthropic and OpenAI. Those are the monetizers. They're the ones that need to justify, the fees that they're charging for the service. And I think there's adoption and pickup in that space. And I think that's going to be a resilient part of the top names in the market, and long-term good positive trends there.
Okay, so if leadership starts to further broaden and continue to rotate, why does diversification, especially to maybe some international exposure, become even more important in this environment?
Yeah, it's really, what we're seeing in the U.S. is clearly the AI trade has sort of dominated the U.S. stock market for many, many years. But if there's a threat to that or a potential challenge to that, and rotation happens, it happens very quickly. And so what we're doing in portfolios is ensuring that we're well diversified, inclusive of investments in energy, industrials, materials, which are moving toward the forefront today because of the geopolitical risks out there. And the international markets are a great hedge, not only against the U.S. dollar and the U.S. Market, but also a nice complement, I think, to the AI trade that's been so dominant.
Okay, so speaking on that risk, how for investors that do want exposure without, of course, being overexposed, how do you balance owning the top AI names while still being in a position for the next phase of market leadership and also, of course, prepared for some of the headline risk right now that's dominating, unfortunately, the overall markets?
Yeah, it's a balancing act, right? So you have to have a little bit of almost everything in a diversified portfolio, but ensuring that you have enough of the AI themes to participate in the winning, driving growth aspect of that, which we do, but it's not a full weight. I think it's really important to see what other sectors of the market might actually benefit.
Okay, so with this broader shift, of course, to these AI infrastructure players, we've seen like memory chip makers are so hot right now still. Software is obviously not. Right now, do you have any of your favorite names that you see in the space or names that perhaps are just more resilient in this current environment?
Well, I think, when you look at software, that's the challenge right now. And we're well balanced in that space. We don't have any large positions in some of the software companies mentioned, but clearly Microsoft is sort of a dominant player, large position in the top 10 names of the S&P, and a controller of its destiny to some degree with an ownership in AI, OpenAI. So you have that company, I think is resilient and can not only be an enabler, a monetizer, but also an adopter, sort of playing across that AI ecosystem. And we like companies like that, and Amazon, other areas that are well diversified in their own businesses.
Yeah, and we're so quick to say that these names are like lacking growth or the catalysts aren't there just because the overall market has pulled back a bit. But I do agree it's still so much of the driving force of the overall economy and overall market. So really appreciate your time and all that breakdown today. Mark McCarron, Chief Investment Officer of Westcott Financial Advisory Group.